time, I'm going to read a land acknowledgement, and then I am going to pass it over to AJ, who's going to read our anti-racism statement. But I would like to begin our meeting by acknowledging that we gather today on the ancestral homelands of the Coast Salish peoples who have lived in the Salish Sea Basin throughout the San Juan Islands and the North Cascades watershed from time immemorial. Please join me in expressing our deepest respect and gratitude for our Indigenous neighbors, the Lummi Nation and the Nooksack tribe, for their enduring care and protection of our shared land and waterways. And now I'll hand the meeting over to AJ for our anti-racism statement.
All right, thank you, Kim. In response to recent racially motivated harassment of a Sudden Valley Community Association board member, as the board of directors, we were compelled to make the following statement. Sudden Valley Community Association stands against racism and in solidarity with Black, Indigenous, and people of color. We acknowledge that the history of systemic oppression, white supremacy, and racism has widespread effects in our society to this day. In light of such systemic racism and standing in explicit opposition to these realities, we strive to create an inclusive community where the dignity of all members is equally defended. We believe that the vast majority of Sudden Valley Community Association members share these values, and we will continually advocate for the voice of every member to be heard and respected. Despite widespread consensus, we have come to realize that it is not enough to assume that all members share these values. This conviction must be affirmed publicly. Therefore, we reject the expressions of racism that seek to divide this community. We contend that until we can say with confidence and without repudiation that Black Lives Matter in our society, there is much work to be done with respect to ensuring equal treatment for the Black, Indigenous, and people of color in our community. Whenever possible and necessary, we will actively engage in difficult, transparent conversations and commit to dismantling racial biases and by understanding and seeking to change barriers that have been created. We will also continually ensure that all voices are heard in an inclusive, respectful, responsible, cooperative, and equitable environment. In this regard, expressions of policy and priority differences are welcome, but we do not consider racism to be a political opinion and will not tolerate it. We are committed to supporting community members and staff through an equity and anti-racist lens and advocating for any change that cultivates a more just environment.
AJ. And next on our agenda is roll call. So I want to acknowledge that Callie Cass is present. Gail Chiarello is present.
Thank you.
AJ Tischletter, president, is present. Tara Eads is present. Alex Ellis is present. And Jean Meixner is present. So all of our full committee is here. I want to thank you all for applying for the committee, and I appreciate you all donating your time to help serve our community. And at this point, the next thing on the agenda is the adoption of the agenda. And we do have a slight change that I'm going to move for in interest of spending more time with our auditors that will be present tonight, that will be presenting the 2019 audit. We wanted to table the how to read the SVCA general ledger until the next meeting. So if everyone is okay with that, I'm going to move to amend the agenda to move the GL discussion to next month's meeting. And do I have any seconds on that?
Second.
And all in favor?
Aye. My hand is up.
Aye. Any opposed? Okay, I will move to amend the agenda as adopted. Next on our agenda is the approval of the minutes from the October 21st, 2020 Finance Committee meeting. I know that none of us were there, so for those of you who went back and looked at that meeting and reviewed the minutes, you're able to second it. So I am going to move that we adopt the minutes from the October 21st, 2020 Finance Committee meeting.
I'll
Second.
second that.
All in favor?
Aye.
Aye. Any opposed? Alex, are you opposed or are you voting in favor? You're voting in favor. Okay.
In favor, yeah.
All right, great.
I didn't
So-
do the meeting, so.
Okay. Then the minutes of that meeting are approved. Is it by acclamation, AJ, or just by?
We voted. Acclamation is if we did like, just ask for objections.
Oh, okay.
We
Gotcha.
don't have to get quite that detailed with
We don't
Rob.
get that fancy.
in here.
I'm learning, everyone. So I'm learning on the job. So thank you, everyone. Capital requests, we have none at this time. So we are going to move on to continuing business, of which there is nothing listed under that at this time, since this is our first meeting. And so then we're going to get on to new business, where we will have the presentation of the 2019 audit by Larson Gross. Are they present or here or be here shortly, Joel?
So they're scheduled to show up at 6:45, so
Okay,
I'm guessing any moment they'll show up.
all right. In the meantime, I don't know if it would be appropriate to start looking over some of the financial things on our end, or should we take a break and come back?
I guess we,
Questions, President?
I think, one thing kind of, this is our first meeting and we're kind of getting up and running, and there's probably going to be questions, moving forward and everything like that. One thing that I would recommend is on the Sun Valley website under resident resources, we have our bylaws, and the finance committee has our kind of roles and responsibilities outlined in the bylaws. So taking some time to read through that, obviously not right now. You can if you want, but that'll help us kind of gauge, what we need to do kind of moving forward. Tonight we'll have the auditor present, so that's kind of taking up a bulk of our time here, and then Joel will go through the financials, and then we'll kind of, as we move into future months, we'll start to have a bit clearer picture probably of exactly, what we're doing moving forward. Obviously we just kind of approved everybody at the last board meeting, and so, there not a lot of communication, and the board had a few things we were taking care of. And so that was part of the reason why Kim and I tabled the general ledger discussion. We just didn't have enough time to prepare all of that. And so, yeah, I think.
Okay. Figured it out. There was another command at the bottom here.
Oh, perfect. All
I
right,
like
you're
Rembrandt better, but
Rembrandt's in the background now,
oh yeah, I'm blocking him out, aren't I? Okay.
blocking him out. And then is it appropriate just to share or maybe give us a update? I know that the board voted to have an audit committee, and though we have no results now, is it appropriate to maybe share a little bit about that with us so that everyone here knows that we have an audit going on and that we will be getting direction from the results of that committee as well?
Yeah, the audit committee, the board formed an audit committee at the December meeting. And so that committee is moving forward with reviewing kind of the last couple years of financials, and they'll be presenting back to the board is kind of the directive initially that the committee has, and then the board will be utilizing any information that comes from that to give some direction to the finance committee as well.
I've got a question about that. Is this audit a routine, like, annual process, or is this initiated by the IRS or some other regulatory agency?
So there's two. The audit committee is something the board established. You know, in light of some things that have happened, we felt it prudent to do such. And so that's, you know, we're moving through some of that stuff. The audit that's tonight is a routine annual audit that we hire a third-party independent consultant to do for us. So they are separate. The audit committee will, you know, obviously take a look at the audit as well, you know, from Larson Gross. But the audit committee is not performing the same function as Larson Gross.
So just to follow up on your answer, so the committee, you said it was because some things happened. Are you able to shed any light on what things happened?
Not really at this point. So kind of confidential. The board gave some announcements to the community prior, and that's kind of where we're at.
Or is this something that the audit that was paid for through Larson didn't pick up? Or is it just a closer look of stuff that they picked up? It's
just kind of reviewing everything over the last few years, basically. There's no, yeah, it's, you know, the Larson and Gross audit doesn't dive into every little financial detail, basically. You know, it's a pretty high level overview. You know, they'll get into that this evening, obviously. And so the audit committee is, you know, taking a little bit closer look at some things.
I wonder if I could ask, who is on the audit committee?
The audit committee is me, Joshua Bowens, and Sarah Holmstrom.
Who is on this committee?
This committee is everyone that's here currently. So Kim Harris and myself are the board representatives, and then Gail Chiarello, Allie Cass, Kara Eads, Alex Ellis, and Jean Maxiner, sorry if I pronounced that wrong, are the committee members. And then Joel Haverling is our accountant manager on staff. And our host, John, is our IT staff. And then Oryx is dark right now, and she is our executive administration. So yeah, there's 3 staff here, 2 board members, and the 5 committee members.
Okay. I'll see you on Zoom.
I apologize for breaking in. Ben Hancock, I believe he's from Larson Gross, has joined. Gone ahead and brought him over from the attendees.
Thank you, John. And if you can hear me, my name is Kim Harris, and I'm treasurer of Sutton Valley Homeowners Association. We'd like to welcome you, and we would like to give you the floor at this time to review with us or present to us the 2019 audit. So if you are ready, we are ready to listen.
Ask a clarifying question first.
Sure.
What are we supposed to be doing as committee members as we're listening to the audit presentation, and what are we going to be expected to do afterwards?
So that's a good question. If you did look at your packet ahead of time, you might have questions for the auditor, or as the auditor is speaking, you might have questions. But just to ask clarifying questions on anything that you don't understand or that you want to make known to our community, because the community is watching this as well. Did you need to add anything to that, AJ?
Yeah, I think, he'll present, and then we'll also be presenting to the board as well. It's kind of standard practice in the industry to have the auditor present the audit and be able to answer any questions. You know, obviously this is you guys' first meeting. Normally the audit is not the first meeting. We were a little bit delayed with the 2019 audit from the last year's board, and it got started a little late, which delayed things. Typically the audit is being completed in, I think, around June-ish, or July before the budget was voted on. But due to some circumstances last year, that did not happen. And so we're a little bit behind schedule here. So the little bit of throwing to the wolves here, and I apologize for that a little bit, but this is just kind of the way the schedule's worked out. But the audit does give you guys a lot of good information on kind of how the association is, you know, the financial processes are run. There's some discussion in that, and, you know, everything like that. So, you know, and we're not like voting on the audit or anything at this point in time, anything like that.
So it's just for our information purposes. Good question, Kara.
Yep, sounds like some good discussion here so far. So I thank you all for letting me join you this evening. I'm going to do an overview of the 2019 audit that we completed. So I'd like to try to share my screen here because I have some slides. Let me see if I can get it to work. Okay, can you
we
see
make
that?
have people mute if they're not speaking?
Sure.
Can you guys see the slides?
Mm-hmm.
Okay, excellent. So yeah, I'm Ben Hancock. I'm a senior manager with Larson Gross, and we did the audit for 2019. We did not do the audit for 2018. That was a different auditor, but we had done the audit for a number of years from 2017 and prior. And my colleague Keaton Werson had done, I think it was the 2016 and 17 audits. So if you were, you know, part of the board or the finance committee back then, you would have possibly met him, but he had baby number 4 in October. So I kind of stepped in and took over and finished everything for him. So it was fun to work with Joel and the team, try to get the audit done here. So I have a little presentation, and the first thing I want to do is just cover for you all what an audit even is. I mean, I present to a lot of boards, and that's kind of the first thing that, you know, they ask about, like, so are you part of the IRS? Is it like a gotcha exercise? You know, what are you guys doing? So I'm going to try to go through what an audit is. So first of all, an annual audit, which means for your calendar year, is required. And it's required by Section 4 of your association's bylaws. It's also required by the Revised Code of Washington for any homeowners associations with assessments of $50,000 or more, which you clearly have more than that. So it is required. Overall, it's good governance. It's accountability to your constituents, which are your property owners. It's a healthy process, part of, you know, the system, your checks and balances. You know, we're not trying to come out here and find anything we can that's wrong. We want to give you credit for what you're doing right, but then also try to work with you to help improve things if they're not up to standard. And just some misperceptions about an audit. An annual audit is not a fraud investigation. Although CPAs do those type of engagements, that's not what an audit is. We're not going out there specifically trying to find fraud, even though it does happen once in a while. It's also not a guarantee that all numbers in your financial statements are right. We use a concept called materiality, where if, say, you know, $500 might seem like a lot of money to you, and it does to me, but, you know, when you have, you know, 30 million in assets, $500 is what we'd say not material. So we do use that threshold, and our goal is to make sure the financial statements are materially correct. We can't guarantee you every number is exactly right, but we can at least, our opinion is rendered that these are materially correct financial statements, and they're correct enough for you to make decisions based off An annual audit is also not an insurance policy. It's also not a review of every check you wrote in the year, even though we did review a lot of checks as part of our audit to make sure they were appropriate expenses. It's also not just a once a year checkup on your staff. I'll mention a concept called internal controls, which is something we look at, because if you have good internal controls in place throughout the year, you know, it's a pretty good likelihood that you'll be able to produce quality information, and there won't be able to be somebody internally that pulls off like a material fraud. An audit's also not a substitute for good day-to-day internal controls. So that's really on the association, but we can point out certain things where there may be a weakness that you can improve on. So Larson Gross, as your external auditor, is licensed by the states, and we're also regulated by federal and state governments and the AICPA. We also get audited. We have a peer reviewer come in and audit a number of our engagements to make sure we did proper work to provide our opinions. We're also independent, unbiased, non-political. We go through certain measures just to make sure we can say we are independent. We're never political. And we have a responsibility to you as the finance committee, as well as the board, your management, your soon-to-be audit committee, and then any regulatory bodies you might deal with. And overall, just in terms of an outcome of a good audit, it really tells you whether your accounting function is giving you good information. And I can say that based on the audit, it does appear accounting is giving you good information, especially with the monthly financials that are on kind of a modified accrual type accounting, which is exactly what you want out of your finance department, so you can have the information you need to make decisions. And then ultimately, we provide you with an opinion that gives you assurance that your financial statements, in this case for 2019, are an accurate depiction of your financial situation. So that's, what an audit is at this point. I guess I'd like to ask if there's any clarifying questions you might have, or does that kind of all make sense? Okay.
So when you find a discrepancy, how is that addressed then? When there are discrepancies in what you're finding and what you expect to find from the numbers?
Yeah, when there's a discrepancy in the numbers, we have a discussion with finance staff to figure out if it's truly something that's incorrect, or maybe just we didn't get adequate support that exists. But if we find something that's materially off, we work with management to make sure the financial statements are corrected. And you'll see also in the management letter, there was a number of audit adjustments that were posted as a result of this process, just to get your financials in a materially correct position. Okay.
I have a question.
Yeah.
And so to piggyback off of that question, so if you're finding something that's not correct, then you correct it as you go along. Is that my understanding?
Yeah, if we find something that doesn't seem correct, we mention it to management, figure out if it truly is incorrect and whether an audit adjustment needs to be posted, or maybe it's just small dollars, it's not material and it doesn't need to be posted. Maybe it can be corrected in future periods, because we're always working around that materiality.
So I might be skipping ahead, and let me know if I am. So in Appendix B, where you had those adjustments, that's documented where something was not accurate and you had to go and ask about it. So you document all those corrections.
Exactly. So, and a majority of those entries you see in that appendix were actually provided by management, i.e. Joel, as part of this audit process, where he found entries that needed to be posted. And so he's working alongside us to make sure that the financials are materially correct.
Okay, thank you.
Yep, good question.
I have a question. Uh, I like the slides that you're showing. Are those going to be available to us? I assume they're not part of the audit report, which I have glanced at. I simply like them. I think they're very clear.
Yeah, I could certainly make them available. Yeah, I could send them to Joel and he can pass them on to you all.
Great, thank you.
Yeah.
I have a small question following up on Kim's. So she pointed to Appendix B, which is the corrected misstatements. I also see Appendix A, uncorrected misstatements. What does it mean that they're uncorrected, and why aren't they corrected?
Yeah, good question. So the uncorrected misstatement there has to do with depreciation. And for some reason in the prior year in 2018, something went wrong with the depreciation that was booked. And so we had to make a couple entries to make sure depreciation was correct for 2019. There's a system report that's run based on all your fixed assets to generate depreciation. We wanted to make sure that depreciation in the fixed asset software matched up with what is in your financial statements. So we did post a couple entries to make sure that was correct. But this entry you see here is a proposed adjustment, was to correct the prior year misstatement, but it was not material. So we did not actually have to post it. We just had to say, hey, this came up, it was off, something happened in the prior year, it's not material, we're going to pass on it.
Okay, thanks. That makes sense. And just for context, what is the threshold for materiality?
I'd have to go back to my working papers, but I mean, technically I'm not supposed to tell you that, but yeah, I could go look, but I could give you a ballpark maybe. Any other questions?
Hey, Ben.
Yeah.
I was just gonna point out too, just to give you an idea, like on materiality, there are a couple of adjustments. One for fixed assets depreciation that were posted, another one for lots. Both of those actually, we could have passed on those as well and kicked those into the next year. Meaning those could have been actually bumped up to Appendix A, but then we made a decision, let's just post that for 2019.
Yeah, good clarification. Yeah, we really wanted to get that fixed asset software to tie in with the financial statements going forward, so it'd be clean moving forward. So yeah, we didn't have to post those, but we worked with Joel to make sure that's all correct going forward. Okay. So I think with that, I'm going to move forward and I want to talk a bit about just our overall relationship and what we've been engaged to do for Sudden Valley Community Association. So the first thing you see on this slide here is what we're talking about, which is the annual financial statement audit. And then as part of that process, we also assist management with drafting the financial statements. So a lot of times we'll just go draft the statements and then, we give them to management and we issue them. But fortunately, you have Joel on staff, who's a strong CPA. He knows his stuff, experienced. He's audited for a number of years, so he knows where we're coming from on our end. So Joel really took ownership of the financial statements, and we worked through a number of different drafts just to make sure we have the absolute cleanest reporting that we can. And so I just want to give credit to Joel for helping with that process, because it's not something we see a lot, where they really where management really owns the financial statements. So beyond the financial statements, we also prepared the Form 990 tax return, which is required for any homeowners association or not-for-profit entity. And if you're not aware, actually, that is a public document. So you can go on a website like GuideStar and look up just about any homeowners association's Form 990. It's a public document. So we filed that. We also have a relationship through our IT managed services group, where they work with John Kyer, who's your boots on the ground IT person, for things such as running backups, monitoring your firewall, making sure you have all the most updated software in place. Also serving as a help desk resource if John needs assistance. So we really value that relationship with you, and that's headed by Tom Lenderman from that group at Larson Gross. And I would like to talk a bit through the financial statements. I'm not sure if you have them all handy, but I believe they would have been part of your packet for this meeting.
Yeah, we all received them.
Okay, excellent. So if you have those handy, I'd like you to maybe open those up, and I'll just talk about a couple of things that jump out in the financial statements that I want you aware of. And if you get those open, go to page 3, which is the balance sheet.
That's page 8, by the way, like in the actual packet, like the bottom number for you guys.
Thanks. I was just about to say the same thing, as pagination is always a little cattywampus in these environments.
Yeah. Okay, page 8. Balance sheet. So not a whole lot that I want to really go through on the balance sheet, but I mean, these are all your assets, liabilities, and then your equity portion of the community association. So probably the first thing that jumps out is it might seem like you have a lot of cash. You have about 1.3 million of cash and cash equivalents, and you have about 3.4 million of cash held in reserve. And the way it works is as dues or other assessment receipts are deposited into your operating account, those will then be transferred over to your roads reserve or your mailbox fund. So they're all allocated in a certain way so you have adequate reserves, because obviously they're earmarked for certain expenses that need to be made. So even though it seems like there's a lot of cash, there's a purpose for all that cash, because it will be allocated to where it needs to go to meet the needs of your community members. Then you'll also see this parcels and lots held for sale of about 178,000. That's your area Y lots held for sale. From talking to Keaton, there were usually questions on that in the past. And I'm going to talk about that in a minute. So hold that thought on the parcels and lots held for sale. And there's not really a lot more I need to go into detail, I think, for now on the balance sheet. So let's flip over to the statement of revenues and expenses on the next page. So this schedule is kind of what you think of as an income statement, but as far as homeowners associations go, they have a set way of presenting financials, and they call it a statement of revenue and expenses. And it's really because the purpose of an association isn't to generate a profit, but instead to determine how much money should and can be put back into the organization. So at the very bottom of that, you'll see excess of revenues over expenses of about 1.7 million. So that's money, in theory, that is going to go back into your programs to continue the association's objectives. And the revenue went up pretty considerably over the prior year. It went up by about 1.7 million. And that's primarily due to the dues increases. So the dues and assessments year over year. For example, there was about a 1.2 million increase in the capital expenditures and reserve funding revenue. And then also that recreation assessment came through at about 385,000 for the year. So revenue overall went from about 4.5 million in 2018 to 6.5 million in 2019. So we're talking about about a $2 million increase, primarily from dues and assessments. And then as far as the expenses down in the lower half, those are actually pretty consistent year over year. They went up a bit, as you would assume, for cost of living, that kind of stuff, but they went up about 500,000 from about 4.3 million to about 4.8 million. So in 2018, there was a 221,000 excess of revenue over expenses, but that jumped to 1.7 million. So about a 1.5 million increase in your bottom line there.
Question, Ben?
Sure.
You're referencing 2018 as a comparison.
Yep.
Is the 2018 comparison chart in this document for us?
It's not, and that is a great question because there's a reason for that.
Okay.
Ordinarily, yes, it would be. Historically, it's always had comparative 2018 and 2019 columns, so you can easily see these fluctuations. However, as I mentioned at the start, we didn't do the audit in the prior year. And so the way it works when you come in as a new auditor is you review the prior year audit work papers. And that's a requirement under auditing standards because you need to get an understanding of the beginning balances to make sure that your year-ending balances for the year you're auditing are correct. So of course, we requested access to the prior auditor's work papers, but we did not get access because apparently there was some sort of issue on the prior auditor's end, possibly with sending them to the shredder mistakenly or something. We don't know, but at any rate, we did not get access to the prior year work papers. What that meant for our audit is we had no reliance over any of the prior year income statement. But in order to provide an opinion for this year, we had to do what's called a beginning balance sheet audit. So we audited the December 31, 2018 balance sheet as part of this audit. So we kind of did two audits in one this year. And that way we could provide this clean, unmodified opinion on your financials. But unfortunately, you just see what's called a single year presentation.
Mm-hmm.
But going forward, the good news is you have clean financial statements for 2019. And then next year, we can certainly show the two columns for the 2019 and 2020.
So Sudden Valley didn't have that documentation to hand to you. You needed to get it from the previous auditor, like the Sudden Valley, we didn't have records of that to hand to you?
It wouldn't be on Sudden Valley itself. It's on the auditor to furnish working papers to show what kind of testing he did of certain balances, what kind of procedures he did.
Mm-hmm.
You know, we house our work papers. I believe it's 10 years. But, you know, it's part of your responsibilities as an auditor is to keep your work papers, to demonstrate to, you know, AICPA, regulatory bodies, whoever is going to audit us as a CPA firm doing audits, to show we did adequate work.
Okay, thank you for that.
Yeah.
Shame on them.
Yeah, so next year you'll have the two columns. It'll be much better, much more transparency.
Thank you.
I figured somebody would ask that question. Why is there not two columns? Because we've always seen that.
I've been taking my accounting classes. I know that there's a missing column.
Yeah, good job.
I have a quick question on the balance sheet. You said the parcels and lots held for sale at 178,000 is area Y.
Yep.
Okay.
So I want to talk
What-
about that real quick here. So if you go back to the income statement, you'll see a line item in the revenue category. It's third from the bottom of the revenue category. It's called valuation adjustment on lots held for sale of $115,663. So this represents what's called a lower of cost or market adjustment. So whenever you have properties that are held for sale, you have to really mark them to market value. So in this case, we had to mark those properties up by 115,000 in the current year to make sure they are stated at the tax assessor's value. So no cash exchange hands in this. It was literally just an accounting entry to show the correct value of those parcels and lots held for sale, which on the balance sheet is 178,560.
Okay. And
Those,
so area, I guess I was under the impression area Y was like a green belt. There's lots in area Y.
Yeah, AJ, it's approximately about 30 lots in a sense, which is and that's the only lot we have available for sale.
And they're up for sale.
They're listed at available for sale.
Okay.
And where in our assets do we track lots that we own but are not up for sale? Is that a separate entry here?
Good question.
Because I assume there's things other than area Y.
So
that
you're
would
just
yeah.
going to see that in the fixed assets for that.
Yeah, so if you go to footnote 4 in your financial statements, it's a property and equipment footnote. And it lists all of your different types of property and equipment there and the value. So like land and improvements.
So I guess I'm
is
slightly
valued-
confused. So if there was a market rate adjustment for the area Y parcels, presumably the value of our other assets also changed. Wouldn't that also be revenue then? Adjustments in value for those, or
No,
were those?
those aren't up for sale, so those would not be adjusted.
That's a good question, Alex. If you only mark them to market if they're actually held for sale.
I see.
Otherwise, they're just at your cost. So overall, I mean, I would really just encourage you all to read through the financial statements when you get a chance. The notes to the financials aren't exactly riveting, but I think you all would get some pretty good information out of reading through the financials. So ultimately, we did provide what's called a clean opinion, also known as an unqualified opinion. So in our auditor's report, we say the financial statements referred to present fairly in all material respects the financial position of Sudden Valley Community Association. And then just looking ahead, I want to just point out a new standard that's going to be applicable for 2020. If any of you have been following accounting guidance out there, revenue recognition has been a big deal in the industry. So, historically, based on your type of entity, whether it's a homeowners association, a software company, a construction company, not-for-profit, you would have different guidance as to how to recognize revenue. So this new accounting standard came out for revenue recognition in 2014. And it's been delayed a number of years, but it's going to finally go in effect for you for the 2020 fiscal year. The good news is I don't anticipate really any change based on the new standard to how you see the financial statements presented, but that will be something we go through with Joel just to make sure we're covering everything required by the new standard. So it's been alluded to a couple times that we also issued a management letter, and that's that document that has the adjusting entries that we were talking about. This management
Uh-oh. Did we lose him?
We may have lost Ben.
I think he froze just at the good part.
Yeah.
Maybe he'll dial out and dial back in.
Oh, he just sent me a text. I'll see what he has to say. Yeah, he just said his computer froze up on him.
Joel, are you able to predict what he was going to say or pick up at any point?
Yeah, he was just talking about the management letter at that point. I just sent him a text. I'll see if it looks like he'll probably have to reboot his computer, I'm guessing, and then log back in. That shouldn't take that long for him to get in. But so where he left off was at the management letter, I guess, at that point. Basically, the management letter just talks about, in a nutshell, the experience of the audit in terms of like dealing with staff here and management, and as you saw, any sort of adjustments that were made during the course of the audit. Of course, I know the thing that's probably surprising to most people when they see an audit for the first time, or they see, especially adjusting journal entries, would be the whole concept of materiality. That's for sure. So it's like when you see materiality, then you see some entries going on, and like, for example, even the lots held for sale or whatever, we could have just passed on those also because they didn't rise to the level of being material to force an entry. But that is definitely another one that, just to get that in the books, just to iron it out in 2019, it was posted.
And I have a question for you. He was talking about the accounting standard. So does Sudden Valley use the FASB or the GAAP? Which standard do we use?
Those are kind of, in a sense, one and the same, generally accepted accounting principles and Financial Accounting Standards Board. So like Financial Accounting Standards Board issues FASBs, which is kind of in the hierarchy of like GAAP rules, so to speak.
Okay, they're the
Kind
same
of like
thing.
all under the umbrella in a sense.
And do we use those? That's what we use
Oh
here?
yeah,
Okay.
absolutely, yeah.
I have a question, if we have a second. I could see in the chat that Alex and Kim and I did wonder why the materiality standard wasn't described. And
Oh.
I say it might be a percentage of total revenue. Obviously there's some measure, right, that makes
Oh,
something
yeah.
material or
Yeah.
insignificant.
Like,
I mean, it
absolutely.
doesn't make sense to say we the finance committee shouldn't know what it is.
Oh, well, actually, there's a that's a really good question, because there's a good answer behind that, because like when I was an auditor, so materiality is always set at the beginning of an audit, and it could be a percentage of assets, percentage of revenues. It could also be by classification.
Ben's back in the
Oh, he's back?
attendees. John, can you help us out? Sorry, not to cut you off.
Yep, no problem.
Thank you.
I'd like to hear the answer quickly, though, that
Yeah.
until it's finished.
So like the audit firm won't let the client know what the materiality level is. Otherwise, the client could play
got it.
fast. They could make sure they butt right up against the materiality, but don't cross it, to force an entry or something.
But now that it's
But is
over,
that
can
still
they tell
relevant
us?
once the audit is concluded?
Yeah, can they tell us
Like
now
Kim
that it's
said.
over?
No, not generally, especially since they'll be auditing us next year.
Hey, sorry guys, I'm back, as you can see. Very, very sorry. Sounds like there was a question on us giving you materiality.
Yeah, they're wondering, since the audit is over, can we know the materiality now?
Or you could secretly tell the finance committee and we just won't tell Joel.
Yeah, I mean, I would love
They
to
wouldn't
tell
either,
you.
trust me.
I would love to tell you that secret number, but you know, it's just one of these things where if we go around telling everybody what materiality is, if clients are really creative, they can really plan for that.
Yeah.
So they can pull off things under a certain threshold, you know, so it's not something that we should, I mean, as a service to you, we shouldn't even be telling you that.
The other
Hope that
thing
makes
about
sense.
I'm okay
Yeah.
with that answer. Thank you.
Okay.
the other thing about materiality is it can change. It's based on whatever may change the decision maker's mind. So if something comes up during the audit that may not be exceed the threshold, but is material in other aspects, then it could still be brought up.
Yeah, well said. Yeah, and it could change every year. One year it could be 3% of revenue. One year it could be 5% of assets. So it can change around. So before I got that blue screen of death there and fell off, I was mentioning the management letter, which is just our required communications. And I don't need to go into depth on that. We kind of talked through the audit adjustments and what those mean, but otherwise it's just what I'm required to tell you as your auditor, which is we audited to materiality. We didn't have any disagreements with management. There were no, or there was certain significant accounting estimates, but that's about all there is. And you can read through that management letter on your own time. But that kind of concludes my presentation. I did want to talk about the timing of the 2020 audit a bit. Joel and I had talked about when it would make sense to do that. And
Gail, can you mute your mic? There's like a background noise coming from your.
there we go. Thank you. So we talked about April, May timeframe for the association to potentially be ready for audit. But the big thing that's been a hang up in the past is the timing of the reserve study. So this past year, the reserve study was finalized in September. So in theory, we can't really issue until the reserve study is finalized, because if you look at your financials, the very last few pages have to do with the reserve study and the planned costs for the following year. And that's a required footnote or a required supplemental disclosure for any homeowners association. So we are really subject to being able to get the audit done based on when your reserve study is finalized. So in theory, you know, if reserve study is not done until September next year, we might be done with the audit in May, but we just have to hang out, you know, until that's done. So I just want to throw that out there. It's just one of those things I know you have to deal with, and
Who
just
does
there's
the
no.
reserve study?
What's that?
Oh, I was asking, who does the reserve study?
Last year, Schwint and Company, I think, is the name of the company that did it. Yeah, we'll be getting going on that here shortly. It's definitely high on the priority list.
Ben, is that customary that, you know, do you work with other associations? And if so, are they in the process of doing their reserve studies while you're conducting your audit? Is that customary, or should we be trying to move our reserve study up some so that it can be done for your audit?
Yeah, we see kind of all across the board. Some get it done quick, some way late in the year, some middle of the year. It's really kind of just what you prioritize as a finance committee, as the board. I always like to get audits done as soon as we can in the year, because that way it's the freshest information for you to make decisions on and know you have good numbers for the year.
Yeah.
So I don't want it to drag at all. So I'd love to see the reserve study done, before, June 30, hopefully. But it's really up to you as how hard you want to push that.
Okay. Thank you.
Something I'll have to work with the board and collaborate between the board and the finance committee on that. And I don't know if everyone saw, but we just announced that we hired a new interim general manager today. So I'd like to sit down and chat with him and kind of get going on that. So I just need a little bit of time, and I'll circle back with the committee and the board to kind of discuss and get that process going.
Sounds good.
Kind of a few moving parts at the moment. So
Understood.
So are there any other questions for Ben?
Well, this might be a question for Ben or Joel or one of the board members or anyone else. Does anyone know why we did not use, why we used a different company in 2018 and then why we went back to the same company in 2019?
As I understand, and when we transition, Larson and Gross was prior, it's somewhat customary to kind of rotate through auditors every few years and stuff like that to make sure, more people and eyes are looking at your books. And I think that was the intention with going with Newman and Associates. And then last year's finance committee and the board opted to not renew going with him for 2019 and ended up going back with Larson and Gross.
And it is good to have a fresh look every now and then on your financial statements, even on long-term clients, say 10+ year clients that we deal with. We always try to swap out the audit team every few years just so we can make sure that accountants not getting too cozy with management and that sort of stuff. So, this year you've kind of got a fresh look now 2 years in a row, because 3 years ago it was Keaton at LG. Then it was a different firm last year. Now it was me who's brand new to all this. And this is Joel's first year, doing a full audit too. And so I think you definitely covered your bases on the rotation.
Anyone else? Questions?
AJ,
Oh.
I thought Kim, I'm terribly sorry. I thought I'd bring it to your attention. We do have a hand raised with our attendees.
Oh, okay. And I can't see that. So go ahead and bring them over so they can ask a question.
Sure. Okay, Sonia, I've gone ahead and brought you on over here. You had a question or a statement? You may have a mute button on your mic, perhaps. It looks like you should have audio. I'm not hearing anything from Sonia here.
Is she able to use the chat feature at all?
She may not be able to, perhaps. Sonia, I'll go ahead and return you to the attendees. And if you need to, you may try to leave the Zoom meeting and then come back. Sometimes that fixes some of these issues.
Also, is it possible, there's a finance email Is it possible, if she can't get her sound, that she can email the finance email? Joel, are you included in that finance email, the finance at Sutton Valley?
Yeah, yeah.
Is it possible if she sends something in that we can forward it to Ben? I mean, I know it would to answer her question if we can't get her question here.
Sure.
I'll make sure everybody has an opportunity to ask.
I'll keep my eyes peeled for any more hands if Sonia rejoins us.
Okay, and then there's also a phone call message. There's a way to call in, right?
There is. That's on the invite. I don't have it right in front of me.
Yeah. But if she has it, she can phone call in.
Absolutely.
Any other questions for Ben before we turn the meeting over to Joel to go through our November 2020 financial statements? Okay, well, Ben, I'd like to thank you for joining us and going through the 2019 audit with us. We appreciate your time. And if in fact we get other questions from folks here, we'll make sure to pass those along and hopefully you can answer them by email.
By all means, yes, please pass them along and I'll get to them, and appreciate all your time. It's been fun meeting with you. Hopefully we can meet in person someday instead of Hollywood Squares. So look forward to that day.
Oh, and I think also, Gail brought up a good point. You were going to send us your slides.
Yes, I will
Okay,
shoot those to Joel
share
right
them to
now.
Joel. Okay, thank you.
Before we conclude, it looks like Sonia just squeaked in here. Should we go ahead and try again?
Let's give it that old second college try.
Here we go. All right, Sonia, I've brought you on over.
All right, can you hear me now?
There we go. Thank you.
Yes, ma'am.
Gosh, sorry. Yeah, it was a good idea to have me exit out and come back. So first of all, I apologize if a couple of these questions were covered. I came in a little late, but I noticed that you keep referencing that you had these discussions with management. And I'm curious who you're referring to as management, because when you're saying that, then it seems to be equating to Joel. So I'm curious who received the management letter, and who also provided some of this documentation to you. Is all of that Joel that did that?
It's primarily the finance department. So there's 4 primary people in the finance department that work to gather all of our documentation requests. In this case, it was all remote, and so there was a significant amount of scanning, but it's primarily those 4 folks in finance that produce all of the information for the audit.
But on your management letter, you said that on the material misstatements, and even on the other, that management determined that they were immaterial. I'm wondering who that is that you're referring to determine that.
Yeah, so in that case, Joel's ultimately the lead in the finance department, so he has final say. But I don't know if you heard the materiality conversation.
I did, but I'm just curious, the person that's creating those documents is also determining whether or not they're material misstatements. It just seems like that's not proper oversight.
Yeah, so
in my opinion.
So in terms of audit standards, if we come across an error in the accounting records that we deem not to be material, we aren't required to post it. Ultimately, these are management and the community association's financial statements. So if it's not material, they have the option as to whether to post that adjustment or not. They're not Larson Gross's financial statements. They are strictly the association's financial statements. And so hopefully that helps, but it's not our call as the auditor to make that decision.
Okay, so So I have a couple other questions. So you referenced the reserve study, and what I noticed though is that when you documented portions of the reserve study, what you did is you included buildings that have never been approved, they don't exist, and they're unfunded. So there's almost $8 million just on non-existent buildings that impact how funded our reserves appear. And I'm wondering why you added those in there. They weren't in there last year. They were removed because there was an issue with the reserve specialists putting them in there, and they weren't in last year's audit, but they've been returned to this year's audit. I'm wondering what made you do that, and who gave was that also Joel's call to add those back into the audit?
So the rest of
it's-
us can follow along. Sonia, can you let us know like where you're getting, like what line item or what page you're talking about? Or I don't know if you have the same materials that we have, but.
Yeah, I just have to pull it up.
It's the supplementary information at the very back of the financial statements. It's the Schwint and Company study information. So the very last page of the financial statements, there's a schedule that has all the different, SURF costs, mailboxes, road fund. So Sonia, just for clarification, we don't actually prepare any of this information or provide any sort of audit opinion on it. This is solely Schwint and Company's reserve study that's required to be included in the financial statements, but you'll see at the top of that schedule, it says unaudited. We didn't come up with any of these numbers, and neither did Joel or anyone in management at the community association. This is strictly from the third-party reserve study.
Well, I'll tell you where I'm coming from. As a community member, I'm a little shocked, first of all, to number one, hear that there are lots available for sale in Area Y when they are not reported on any of our financial documents, including the one attached to this finance committee's agenda for this month. And it shows that we have no available lots, that there are no lots being held for sale. And then to hear our accountant be aware that there are lots available for sale in Area Y when we've been led to believe that that would not be developed, that area. I do realize that there's 45 potential lots that were available there, but we've been led for many years to believe that that would not be developed. And now to know that I'm hearing that he was aware of it, it's not being reported in our financials. And so I'm starting to be a little concerned with the direction that this audit, the shift, because the other aspect is that you've included roads in the fixed assets. I don't understand how you're determining that our roads have that valuation. There's really virtually, you can't capitalize them, and you're not supposed to depreciate them. And so I'm a little confused at that valuation. And not only that, it's increased exponentially. And to me, if you're actually going to look at roads and you're going to include them and even depreciate them, what you would really be doing is wanting to look at a straight line depreciation where you're taking the actual capital expenditures on, let's say, a seal coat or asphalt, like a resurfacing, and you're going to take those expenses and then calculate that out and depreciate them. But I'm not quite sure where these valuations are coming from. I don't understand why we're putting non-existent buildings that weren't in our previous audit, regardless of the fact that they were in this reserve study is the same as it was last year. We didn't put it in the audit last year. It should not have been in the reserve study. But I mean, you understand my concern because it impacts how we look, how our funding looks, and it impacts our dues requirement. You know, when we start to appear that our reserves are unfunded. And I'm also curious, what would be the point of overvaluing? I'm kind of skipping around here, but this fixed asset situation. I'm wondering why we're overvaluing our roads. And some of these items seem to me that we should have already, they shouldn't even be on there anymore. We should have already completed their depreciation term, and they're not like falling off of that list, you know. And I'm just wondering who's overseeing this? I just feel like I'm seeing the same stuff being repeated. This looks very similar to your audit from 2016 and some of the stuff in 2017. I know you picked up some of the things from 2018, but I'm just curious, you know, like, how are these things being determined? Who's making the valuation on the fixed assets? And why are they being included in there? Are you doing that because there is a policy to capitalize our roads? Is that what it is? And then our board would just need to create a new policy to change that?
Yeah, I can tell you roads are, that's part of our capital policy. So the capital policy is anything that's $2,500 or more, or is useful and has a useful life of a year or more, is approved by the board, and then that is what is capitalized. And capitalizing, depreciating roads is absolutely nothing unusual. City governments do it, county governments do it, and we've been doing it all these years. And there's nothing wrong with doing that according to any accounting standards.
Well, they generally just depreciate the expenditures, not the value of the actual, like a road replacement.
Well, meaning like if it costs us, say like $1 million to pave a road, then that $1 million would be capitalized on the balance sheet and then depreciated over time. And that's standard.
Right. I don't disagree with that. It's the dollar amount that you have, because that's you're coming up at like something like $12 million, or so I think 9.4. So what you're doing is taking like the 30-year estimate of the expenditures, the potential expenditures on the roads, and then determining that that's somehow the valuation of the roads. That's what it appears to me. I don't know.
I mean, the value of the road would be whatever the road cost, per se, whatever we paid for this road, minus however much we depreciated it at the time that these financial statements are prepared.
Okay, so do you have a worksheet, is what I'm saying? Where did you come up with that valuation? How are you determining that? So you're giving that information to the auditors, and then they're working off of the information you're providing them, correct?
You're talking about something from the balance sheet or from the reserve study?
Yeah, I'm talking about from our fixed asset valuation.
Yeah, if you're talking about it from the balance sheet, then that is all basically tracked in fixed asset software. So basically, okay, the amount is recorded in the software, and then the amount that, or the number of the useful life, which is how many years it will take to depreciate it, and then that's what's figuring like the depreciation expense for the year.
Okay. So I'll look at those numbers. Actually, they actually work out to be what's on the reserve study for what is predicted to spend over the next 30 years. It's actually that number, coincidentally. But yeah, I'd like to look at that. So maybe I can send a request and review that. And then, so I'll get off that subject, but then I have, and I'll stop after this, but I have another question. So, so basically, you're saying that that you did not see any, you know, any kind of deficiencies, but do you feel like that there may have been any kind of deficiencies that that may be occurring that just, I don't know how to word this. I don't want to trap you here. Is it possible that there are deficiencies that just would not have fallen under your purview, I guess it would be the word. I mean, like I know previously there's been issues regarding, you know, Larson Gross's advice that for us to stop taking in cash in the office, but that's continuing to happen. The other aspect is that the FDIC accounts, and so a couple of years ago, you guys made it on your audit repeatedly saying that our accounts weren't federally insured. All our accounts weren't federally insured. We moved them to Mutual of Omaha, CAB, and we had sweep accounts. In March, our reserves were moved to another account, another bank. And what your audit says is that our funds may not have been insured at all times. So did you find that our funds were uninsured at any time? Are some of our funds associated with accounts that are not attached to sweep accounts?
Yeah, so you'll see in the financial statements in the note 2 under cash and cash equivalents where it says the association maintains its cash and cash equivalents in bank accounts that may exceed federally insured limits at times during the year. So pretty much, this is common to pretty much any business. You know, I can't even tell you the last time there was a run on a bank where the FDIC wouldn't actually cover the amount, you know, over 250. It's so rare, if not impossible, that it's not worthy of being in our management letter, just because it's not a significant business risk. But it's in your financial statement. It says, hey, this happens. If the stars align, hey, and there's a black swan or something that happens in society, it could happen. You might lose what's over 250,000 in an individual bank account, but it's pretty rare.
So, but previously, all of those accounts were attached to sweep accounts so that that wouldn't happen. So what changed?
Those accounts that you're referring to, and like when you said it was moved from one bank to another, actually I assume you are probably seeing something in the general ledger, but what that is that was, I believe, back in March. Mutual Bank of Omaha became CIT Bank, and those wealth management accounts is what they were called. Since they became CIT Bank, and they contacted us and said, "Oh, sorry about this. We're not offering this product, but we have this premium money market, which is the next best thing in terms of interest rate offered." So that's the only transfers you're seeing, just going from wealth management to premium money market, and those are covered.
So they are covered, even if, like, let's say we exceed the limit, then they'll sweep over into, okay. All right. Okay. All right. Well, thank you.
Yeah. Sonia, when you get the information that you're requesting and you go through the numbers and kind of either answer your questions or formulate your questions, would you send that back to the finance committee with like line items that you're talking about and the specific questions you have about that? Because I would like to understand more about what your questions are.
Okay. Yeah, sure. Thanks. And thank you, Ben and Joel. I appreciate it. And thanks for letting me take your time, everybody.
Thank you, Sonia, for your very, very good questions. We appreciate you.
Thanks, Sonia.
Thank you.
Thank you, Sonia. Have a good evening now.
Based on Sonia's questions, do we have any more questions for Ben before Joel outlines to us our 2019 financial statement for November. Oh, I'm sorry, it looks like it's the November 2020 financial statement.
Yeah.
No more audience members. All right, Ben, thank you very much. We appreciate
Thank
your
you.
your expertise.
Thank you, Ben.
Anytime, yes.
You know.
Good talking to you all. Thank you very much.
All right, and then for my sake, Joel, as you're referencing, you have slides for us, right? I think we're gonna, one of the things that I asked that Joel do is to give us slides so we can keep up with what he's saying as a visual, but we also do have
But we do have the,
the file.
so, no, not muted.
And one meta question. I know that it's been a few months since this committee has met, or at least I'm told that. I just joined it. Is it fair game to ask questions about the past couple of months as well, or are we focused only on November?
So Joel might be able to answer that, but the rest of us are new. So everyone here, I'm new, you're new, everybody here is brand new. So Joel's our historian.
Yeah, I think what I was specifically asking is it fair game to ask Joel about previous months, or is that off topic?
And Joel, I'll let you answer that question, you know, how far you are able to go back
Yeah,
memory-wise.
if it's a question that relates to any month prior to November, then I think the bylaw says Kim has to answer that.
Then we're in trouble.
I think we can get into some stuff. I don't want to get it into like too many rabbit holes or anything like that in the first meeting. I know there's going to be questions, and we'll have to do some communicating, you know, via email and kind of getting everyone up to speed, and that can be a good way to get some questions answered. You know, that way we don't have to sit here for 2 hours either, or 3 hours or something. I don't like to take up committee. You know, personally, I like to keep things 2 hours or less for the committees. You know, none of you guys signed up for the commitments that the board members did. So I like to respect everyone's
Thanks,
time.
AJ.
Oh.
Also, I don't know if everyone saw Gail's message that she had to leave, but she'll make sure that in the future meetings she's able to stay, as she said, till the bitter end. So
I think AJ, we're planning on having Ben come back for the board meeting, right?
Yeah. So if there's additional questions you think of, you can email them to the board, or me and Kim. You know, we can get them to the board and get things answered too. So, and yeah, you can ask questions, Alex, if you want, and if there's simple answers, we can, you know, get into them, and if things get complex, we can follow up with answers.
Yeah, I'm also happy to like leave it for email if we have an email mechanism set up. I think I'm not aware of one yet.
We will. There's.
would that be the finance committee meeting?
Yeah.
Are we gonna? I mean, the finance.
It'll end up getting. John may actually already have it set up to forward to everybody's emails, basically.
Yeah, and the e-blast, I think it's finance@suttonvalley.com. The e-blast has the finance committee questions, and they set that up so we can have community members actually who can't attend the meeting send questions to us as well.
I'm double checking that right now. I'll get back to you on it.
Thanks, John.
Yep, we'll get it set up soon if it's not.
All right, Joel, let us know what page you're on so we can follow along.
Okay, so the pages that I'll quote you will be the actual pages in your board, in your agenda packet, which is that bottom most right number.
Okay.
So we'll start out with page 28, the balance sheet. The balance sheet is probably the most boring probably of all the others. So I don't really spend too much time on the balance sheet. So basically you're just looking at first section's operations in terms of like, and it's splitting out assets, liabilities, net operating assets. So that's the important thing, the net operating assets, that we have a positive number on that, which we do. We have a nice positive number. Yeah, then down below, we get into the capital part where you see the cash line items. Now the capital cash line items, just in case, So the column next to that, which is you'll notice now it says audited December 31, 2019. So this is the audited balance sheet right here. If you were to like set this side by side to our audited balance sheet, you'll probably notice the numbers don't line up correctly. That's because I use different groupings. I mean, it's the same numbers, just in different pots, so to speak, a little, to pull it more in line with the way that we're always used to seeing this. So like, for example, with capital cash in December 31, 2019, you'll notice like SURF, roads, mailboxes, definitely these. You might look at these and think, oh, these look lower than what the audited financial statements say in the balance sheet. And that's because in these numbers, like any accounts payable that relates to these capital accounts, this is more conservative. It just deducts it automatically from it. That's why. So like, if you're to compare the audited accounts payable amount, then the audited account, or then the accounts payable on our balance sheet looks about half as much or so. That's the difference right there. So that's why you'll see some kind of minor differences. But this presentation that you see in our financial statements is pretty much the groupings, how it's always been presented to the community. So it stays like that. But in terms of like the numbers behind all these, if I reshuffle them, it would line right up also with the audited financial statement. So the member equity section down there, that you could tie straight across, no problem, to the financial statement. But I'll go back to the November 30, 2020 column anyways. And so, so I talked about the capital cash accounts. We also have up there, I've mentioned before in prior months, that PPP loan liability. It's in the operation, 357,700. That's the liability section of it. If you're wondering, well, where's the other side of that? The cash, that's in the operating cash, the top number, that's 790,226. Now, the only other number that I'll point out is the SURF loan down here, this 1.377 million, 1,377,108.
Well, I'm sorry to interrupt, but you're jumping around so much. It's really kind of hard to, like, you're not going in order on things. So it's hard to like find stuff. So if you could go a little bit slower.
Oh, sure, yeah.
Okay.
And the balance sheet is, I agree with you. It's especially jumping around on this thing. It can get confusing, that's for sure. But so what I'm looking at,
like on half of our screen so I can still see the people. So
oh, does everyone see, do you see the big bold member equity section down below? So you see up above where it says long-term
member equity.
Yeah, the bold with the double lines under it.
Mm-hmm.
And if you go up a couple lines, you'll see the long-term liability SURF loan amount right here. Now, the only reason why I'm pointing this out, where it's 1,377,000, is remember the board approved last month to move the surplus weighing operations from that. So that was moved out in December. So that takes hold, that'll show up on the December statements where you'll see that amount dropping by that 105,000 or so that it is. But that amount was moved out shortly after that board meeting. If you turn the page to page 29, so now we're looking at revenues and expenses for the both month to date and year to date on here. I always start out by talking about the collection rates, since that's obviously a very important number for us, collection rate wise. So for November 30, 2020, month to date collection rate was 98.1%. Month to date, October 31, last month, it was 94.9%. So the collection rate on a month to date basis went up in November, which means that the year to date at the end of November was 94.9% collection rate. Now, I've already calculated the December collection rate, so the year-end collection rates for all of 2020, and month to date for December, it's still stayed surprisingly really well. Month to date, 97.8%. So meaning the bottom line for the year, so at the end of December 2020, we finished out with a 95.1% collection rate for the year, which is quite frankly, like probably what, it's hard to say. Of course, I didn't know what it'd actually be going back to March, especially during the the whole pandemic stuff and how that would affect things. So collection rate is basically the takeaway at the end of November is 94.9% year to date. The end of December, 95.1%. So that's what we finished out the year with, 95.1%.
Very quick question. What's a typical collection rate in a non-pandemic year?
Well, that's good. That's a good point that you asked that. So for 2019, we finished out year to date 97.3% collection rate. So we did take a hit. You know, instead of 97.3%, now it's 95.1%. So it wasn't as high as it was in 2019.
And 2019 was typical?
Yeah, typically, I believe the year before that in 2018, I'd have to go back and look, but it was right in that ballpark region, like the 97% or so rate.
Thanks.
Yeah. So now we're looking back.
I think we've been in that ballpark for a few years.
Yeah.
After the pandemic. Yeah, 4 or 5 maybe at least. Definitely since I've been here in 2007. So.
Yeah. Now looking, so I'm just, in terms of, so I'm looking at the current month net income amount. I wonder if I should just share the screen, quite frankly. Would that help out if I did that?
I was going to suggest that if you share the screen, that way you can use your pointer to show where you are and we're not trying to scroll around and catch you.
Yeah. Actually, that's not really what I wanted.
Also for everyone, if you look in the chat, John put the email for everyone. It is financecommittee@suttonvalley.com. So questions there will go to everyone, including Joel, I believe.
What are you guys seeing? Can you see the financial statements?
I see a balance sheet.
Can you see it scrolling?
No.
Okay, hold on one second.
You got 2 screens. Might only share one of them. I don't know.
How do I share this one?
If you're screen sharing, whatever you do, we should see whether if you're scrolling or not.
Resume share right there. Right there.
Oh, okay. If I don't want this and I want that, how do I do that? Or do I have to pull it over here?
Stop your share for a second. Or hit the red stop share. Let's go ahead and reshare. Go down to share screen. It should give us some options. Screen 2. That's what you want right there.
Okay.
And then hit share.
Okay.
There you go.
All right.
Can you make it bigger?
Is it bigger?
Yes. Fabulous.
Okay, good. So what I'm looking at right here is this number, this net income loss for the month for November 2020. So we had a bottom line net loss for net operating income of $9,735, which is actually pretty good because I don't know if you remember, but last month I was projecting that maybe we'd come in around, with all the available information I had at that time, around 2,700 or 3,000, around that number. So the number was actually fairly close, kind of close to what I said. So with 9,735, now that means we're better than budget for the month by close to 14,000 right here. Now, especially at this point in November, we'll look at, so to look at this year to date in November, we're sitting at 65,943 net income at the end of November 2020 year to date, which means we're ahead of budget by, around 8,300. Now, so last month at the end of November 2019, we had a $286,000 net income. Of course, we would expect to see us taking a hit by that. If you see this drop in the revenue up here is from the dues that we waived back in April is what's really triggering that. Last year, we were about about 249,000 better than budget at the end of November.
And Joel, how much do we pull in each month for dues?
Oh,
It's
so,
about,
so right here, the month to date, so we charged about 183,153 for
okay,
operating dues and 33,324 for the special assessment rec.
okay.
And then this amount right here is you're seeing the bad debt expense part of it. So in terms of like expense to revenue ratio, I say that number, I've said that number in the past. Basically what that just means is that just is a ratio of total expenses to total revenues. So basically for every dollar in revenues, how much are we spending in expenses? So at this point, it's at the end of November 2020 year to date, 98%. That just means for every dollar of revenue that we took in, we spent 98 cents. So
And what is it in a non-COVID year? Because that's pretty high, right?
yes, it is higher. Like for example, back in 2019 at the end of November is 91.8%. So at the end of November 2020, 98%. What's the thing that's driving this is the fact that since we have less revenues because we gave away, a month's worth of dues, is automatically what's going to contribute to an increased expense to revenue ratio. In October is 97.5%. So it's hung fairly similar to what it was back in October. When you turn the page, next page to, in your case, page 30, this is the reserve cash balance and activity spreadsheet right here. All this really is a function. This is showing you like SURF, roads, capital reserve holding, board density reduction, mailbox, signed savings, emergency operations, UDR. So the reserve accounts, not your operating account, just especially like your main capital accounts like SURF, roads, mailboxes. But SURF and roads are the two biggest ones where you'll see stuff getting approved out of. Nothing's been approved out of mailboxes yet, at this point. And it's just, all this is showing you is the dues collected and how much we've received in interest income, any sort of sales of assets. Basically, the 2020 expenditure is a big line right here. And then this section down below is showing you what we anticipate to take in, like through, in this case, based on a 92% collection rate. Now we're in November, so we're looking at 1 month of dues coming in at about 104,485 for SURF. And then this is the big thing right here. How much we're on the hook, so to speak, to pay out in terms of capital expenditures that the board approved to be spent at the board level. And right now it's 234,886 at the end of November. And all that is just, if the board approved, let's say $100,000 expenditure, and then so far we spent 10,000 on the thing, then what you'd see here would be 90,000. We're still on the hook for 90,000 worth of expenditures. And then there's this board recommended carryover balance, kind of like a safety amount, not to drop below. You can think about it like that in a sense, which would give
Joel,
you
the parentheses means that we're
negative.
negative, right?
Yeah.
Okay.
I mean, yeah, this will take away.
Yeah.
And so then bottom line at the end of December 2020, we're looking at about 975,000 for SURF, 1,083,000 for roads, 803,000 for capital reserve holding, and so on and so forth. And these balances are basically all up from the prior year. But the big takeaway on this schedule is it's just a reflection of how much you're taking in dues and how much you've kind of allocated so far to be spent through capital expenditures. The big thing that'll drive that will be board approved capital expenditures. So these balances, like up here, will tie back to the balance sheet, 12/31/2018. These balances will tie right back to the 2019 column. And then these balances right here will tie right back to the 2020 balance sheet numbers down here. Now,
Before you move on,
Oh.
Joel, before you move on, just to clarify a few things, the reserve study that was talked about a little bit with the audit is a driving factor in, what sort of funding, we need, is particularly in the SURF account. And then we, typically have an engineer who develops kind of a capital plan for our roads. That's also a part of our reserve study, as well. And those are big factors, in like the capital planning aspect of the association. And we'll start to get you guys some of the information that we do have, and there'll be some updating of that, and working with our long range planning committee a bit to develop a comprehensive plan, and and figuring out how we can finance that and things like that.
Mhm. This next page, which is page 31 in your packet. This right here, so you're looking at the income statement again as well. So remember how I talked about up here? So this gives you the whole association perspective, like 10,000 foot level, so to speak, from the top down. And then when you get to, so like for example, so remember this number right here, this 9735 loss right here under the month to date. So then if we go here to this page, now you're looking, here's that 9735 right here. And then stuff down here is just after UDR spending. So the big thing from basically here on up is going to be, so basically this whole section through here, here's all your operation stuff. That's the stuff that really matters in terms of, are we sticking to budget or whatever. And so you're looking at that income statement again, but now it's split out by department. So now you're seeing the individual departments and how they make up that number is what you're looking at. So then you have the first column, which is the actual revenue that they took in. The next column, which is revenue better or worse. This is just the variance. And this column is the salary and benefits, salary, payroll taxes, health insurance, to get in there. And then that's just this column next to it, variance on the salary. And then this last column this next column is all other expenses. So this number plus this number would give you the total expenses for the department. Now this is just comparing the variance to here to the other expenses. And then basically when you come down here, net income loss, here's your total net income loss for that department. And here's the variance, better or worse for that department. So basically this number right here is just actual revenue minus salary plus benefits minus actual other expenses gives you this net income right here for the department. And then here's the variance broken out just for that department. And this gives you for each and every department down here, which is somewhat fairly similar to last month in terms of nothing really huge going on in terms of variance.
So, Joel, the better or worse is based on the budget for that department?
Yeah, exactly. Based on the budget. Based on like what was like the actual approved budget that was in the major one that went out on the ballot. Now, I'll point out golf here, since this is basically, one of the biggest revenue driving departments. And so the revenue right here for golf, and keep in mind, we're only looking at the month, just for the current month. So revenue for golf, 35,686. Last year at this time, November 2019, is 25,066. So it's up by 10,620 for the month. Now the total expenses for golf, so keep in mind total expenses is actual salaries, benefits right here, plus actual other expenses right there. Those two added together is 60,369. Last year at this time it was 87,758. So the expenditures are less by 27,389. However, keep in mind in November of 2019, they had 3 payrolls that fell into November. And so like, for example, so golf's expenditures last year were, about 18,000. how I said the golf was 27,389 better than last year, expenditure wise. You'd have to also take into account that they had about approximately $18,000 in extra payroll expenditures last year too. So if you took that away, then golf would be about, approximately 10,000 less in expenditures between the 2 months. And this golf line item too, by the way, I should also point out, this is golf and turf combined, since it takes the two to run that department.
Golf and what did you say?
Golf and the turf department,
What's the second department?
turf
Turf care,
care, yeah, turf,
like they do all the golf course maintenance, lawn care,
Like the grass. Okay.
yeah, the greens and stuff like that, yeah,
drainage, that type of thing.
yeah.
Yeah, golf is two entities, the management, which is like the pro shop and that type of thing, and then the maintenance of the course make up the whole golf department.
Yeah. So you think about it like golf enterprises, how you think about it. So net income wise, golf had a loss. This time of year, they're going to have a loss. So they had a loss 24,683. However, last year at this time, they had a loss in November of close to 63,000. So they're actually better than budget, or better than how they did last year by about 38,000. But if you took away that, also factored in there's an extra payroll in November of last year, then you could say they're better than budget realistically about 20,000 net income wise, if you want to do like apples and apples comparison. If you go to this next page, page 32, which is basically the last page in terms of in your packet, in terms of things to really interesting things to look at. You're looking at the exact same thing. So actually, let me scroll back up here again, back to, remember how I started out with the income here. So now we have the year-to-date column. Maybe I shouldn't do that. But anyways, this year-to-date column here. This is now, can be seen on this page. So all the numbers you're seeing at here would be January 1, 2020 through November 30, 2020, year-to-date numbers. Big variance as well, really the big variance, and I've talked about this in prior months too, this 116,183 for maintenance is largely related to weather. Like for example, in 2019, they had, it was like 92, 94, somewhere in that range, 92, 94,000 and that 96 possibly, where they actually did a transfer out of UDR to pay for, they earmarked UDR away to pay for weather-related services. And now this year we didn't do that. We just let maintenance take it, so to speak, to shoulder it all this year. And that's a huge lion's share of this difference right here this year. In terms of golf, so now golf year-to-date, 902,883 for revenue. Last year at this time, at the end of November 2019, they had 884,000 approximately of revenue. So that's a difference of about 19,150 or so, meaning better off this year than last year, which is actually pretty good given the fact that they were shut down with the pandemic back earlier in the year for about a month or so, several weeks at least. Total expenditures wise for golf again, keep in mind it's this number, it's the salary benefits plus all other expenses right here. So they had approximately $791,000 of expenditures for golf. Last year, now it doesn't matter where that extra payroll fell in, whether it's last year or this year. Last year, the extra payroll fell in November. This year fell in October, but it doesn't matter because now we're looking at year to date. So year to date, they had about 791,000 expenditures. Last year to date, they had 842,000 approximately in expenditures. So they're actually better off expenditure wise by about $51,000 this year. Lower.
Yeah, but that's because they were closed for a month because of
Yes.
COVID, right?
Oh,
Not
yes.
because they were doing a bang up job cutting expenses.
Yeah, well, no, you're exactly right. When they're closed like that, not paying as much salary, and
Right.
that definitely factors into it. Yeah, and in terms of like running the course and stuff, they're shut down. So yes, that is a factor.
Didn't we raise our fees as well for daily play? And I believe we did. So that factors into increased revenue as well.
Sure, yeah, any of those things, exactly. whether like what Kim pointed out with the closure and or any fees or will factor into that. So net income 112, approximately 112,000. Let's round it up. Last year net income wise, they had 41,836 at the end of November. So they're actually better net income wise by about $70,000 at the end of November than they were last year at this time. Of course, now, yes, one thing I compelled to point out is, yes, you're right, Kim, that since they were shut for that time period, they definitely had operating expenditures that they didn't incur for that time. But I also have to say too that they didn't take in revenues, obviously as much for that time too. So they've definitely benefited, probably from a lot of the closures out here in terms of golf being one of the few things that people can do in terms of.
Don't say that to a golfer.
Oh yeah, yeah.
Shh.
But that's like in a nutshell, that basically covers the financial statements. Well, I know also like on the agenda, I saw that the December 31, 2020 capital planning or capital reporting was on the agenda. Now, normally I would include that with the December numbers, but I mean, I've got the capital spreadsheet updated as much as whatever the heck is in the GL now in terms of, we could always get some more invoices in January that could have December dates on it that can apply to it. But gosh, I wonder if I have these. But this is essentially what this thing looks like. So like 3 different pages. Now, like I noticed, or like I mentioned before earlier, 2 biggest ones, I mean, the 2 real big ones, surf and roads. So this first page is roads. And so basically like it'll have the first column is board approved, like whatever the board approved for the project to be in terms of expenditure wise, like marine, we'll just look at this last one, Marina Gate Arm. So it was approved by the board, 42,938. Then the next column is just everything that has been invoiced that we've received so far from vendors, construction contractors, whatever you're looking at. So in this case, we've only received 65 now, which means basically we still have, so it's this column or this column here, if you want to look at that, it's just basically what the board approved, what we've been invoiced so far. And so basically we have 42,873 that we're kind of waiting for, that we could be charged, but we probably will be before it's all said and done. And then when all these are added up here, like this 225,262 right here, in the November, or I mean, when I do the December statements, if this doesn't change, if we don't get any more invoices in that pertain to December, then this 225,262 will then show up right here in terms of obligated expenditures.
So that explains why there's like a month and a half lag time on these reports is due to billing.
Yeah.
You don't get your invoices in on a 30 day.
Like invoices that come in and journal entries that just take time. They're winding their way through the system, like payroll and all of that stuff. Yeah. But that's in a sense how I come up with this important number right here, this obligated expenses. So like in December, if we don't get any more invoices, this 225,262 for surf will then be plugged right here. And then the difference would obviously go up in here. So like, for example, if we spent 100,000 of this would drop to, now we're only obligated for 134,886, but then this would up here would go up to $723,227 in expenditures for the expenditures part of it. So that's how that works. So this is like, so what you're looking at right here is surf. So this is all the expenditures that have hit AP. Even today, we just did a payroll run can't remember if Davey emailed you guys, AJ or Kim, about checks that for signing. I can't remember if she sent that out.
He
But
did. I think we got it figured out. I'm
Oh,
coming
okay.
Friday unless somebody can go before. And Josh is coming tomorrow.
But this number here includes everything through today, you know, like what was received so far. And then the next page right here, roads. Here's the roads one. So like, for example, this Southern Court remediation, yeah, this originally was, I can't remember, it was around 50,000 or something like that, or whatever it was. And then the board did a couple basically change orders to it and increase the amount. So now the obligated or the approved expenditure is, the board approved amount is $200,000 for Southern Court remediation right here. And we spent 153,000 approximately. So we're expecting we could get another 47,000 or so in billings for Southern Court remediation.
Does everyone on the committee know what the SURF fund is?
So it stands for Capital Repair Replacement Reserve Fund. And in a nutshell, that is everything besides roads and mailboxes. You can think about it like that.
And so what's mind melting when you're looking at this is
Yeah.
we say SURF here, but when you look at it on the paperwork, it's CRRF. So that's very, very confusing. As AJ once said, it should be called the CRIF fund, not the SURF fund.
Yeah, CRIF.
And that's a loan we took out, right? To pay for expenses? No?
No.
We have a loan
We do.
that comes out of that account.
Gotcha.
Yeah. Those projects were closed out at the end of 2019. It was, you know, stuff like the standpipe and Area Z sprung structure and stuff like that. And like you're looking at right here, the thing for roads, whatever the heck is hit the GL, hit accounts payable through this afternoon. So 152,303. Now, if I were to do December statements, then it just get plugged right in here in this amount. And then what comes with this is also like, there's this one last page UDR, and this is anything still hanging out that's an approved code, you know, the board has approved that could be spent from UDR. But like, for example, we do have stuff like Ken's Cozy Kitchen. This amount hasn't changed in months because I don't even believe he's here anymore, I don't think.
And UDR stands for undesignated reserve,
Yeah,
right?
undesignated.
So it's important to explain these terms for everybody as we're new, because it was driving me crazy as a new person to not know what all these acronyms were for and the ones that didn't match the acronyms. So,
yeah,
undesignated reserve, UDR.
Like, oh, I just went right. UDR, like on this, yeah, so it's this last column right here on this reserve cash sheet. Basically, you think about it like that. And what that is, what the undesignated reserve count, basically in a nutshell, what that is, so now since we're in 2021, if we have unpaid dues from the year 2020 or prior to that, only for operations too, by the way. So if someone pays their dues, like past dues relating to 2020 or before, those dues amount will then go into the UDR reserve fund, and it's only for operating dues too, by the way. So if they pay back their dues, like surf roads, that will go into the surf roads account like normal. So it's only the operations portion of the dues amount that from 2020 and prior at this point, then will go into the UDR account. And once it's in the UDR account, this is another fund that the board, it's at their purview. They can decide, they could vote to spend this on something like back in 2019 when they approved to spend money on weather-related snow removal and stuff like that. And these project codes, is that you, Alex, or AJ?
No, that was me. I was just wondering, and I appreciate you taking the time to point out what you have as of December. I just wanted to note the time. We're approaching 8:30-ish, so I just wanted to ask you if you can wrap up for us and see if we have any questions.
No, I've covered everything I wanted to cover at this point. So.
Okay. Does anyone have any questions for Joel on the financials that he presented? It's a lot of, if you haven't looked through these, it's a lot of information.
Oh,
And
it
I
is.
know for myself, it's a matter of laying everything out and staring at it until you start matching numbers and it makes sense. But if you keep doing this month to month, these things will start making more sense to you. I know it has for me over the past couple of months.
Yeah.
There's a lot of information to get to. There's all these different accounts and everything like that. And so, this first meeting is always a bit overwhelming and feels a bit unorganized, getting a committee kind of rolling for the first time. Me and Kim will make a conceited effort here over the next couple of weeks to get you guys some information, with regards to everything, and just start to get everyone kind of up to speed with stuff. So,
Yeah,
don't feel like you have to get everything right now. We can communicate via email and answer questions and things like that too, and go from there.
Yeah.
and then just like the first day of school and college, where the professor gives you the syllabus and you just you're ready to drop the class.
First day of Greek lesson.
Yeah. So thank you, Joel. And I wanted to now ask John to come back for us and see if we had any community member questions.
Yep, I'm here.
Right.
We do have a couple of attendees. So if anybody is interested in their voice of the conversation, just use the raise hand feature in Zoom. We spoke to Sonia earlier. We'll see if any more input is of interest.
It looks like we have Leslie and Sonia in the audience there.
Looks like Sonia's got her hand raised here again, so I'll go ahead and bring her on over. There you go, Sonia.
Well, I figured since no one else raised their hand, I would jump in there. Okay, so this question is for Joel. I'm going back to March when you're talking about moving all of the millions of dollars in reserve funding to a new bank. Who authorized that? And how come there was no transition plan presented to the full board as had been done previously when there was consideration of moving it over to Mutual of Omaha? There was a transition plan. It was put in front of the board and the community. We were all fully aware of what was happening. The only reason we knew this money moved was because when the quarterly general ledger came out, I saw all of the reserve funds had been transferred. And it doesn't even say what bank it got transferred to.
Yeah, I can answer that question. So basically, when those funds were transferred, those did not really go to a new bank, so to speak. I guess a bank that took on a new name, basically the bank so it's Mutual of Omaha Bank, and they were called Wealth Management Account Funds, which is basically bottom line offered us the best interest rate on those funds. And then when Mutual of Omaha Bank became CIT Bank, then they contacted me. Of course, to me, I would rather have not even had to do this. It was just a hassle at the time, but contacted me and said, sorry about this, since we're becoming CIT Bank, this particular product, the wealth management account type of account, is not going to be offered anymore. So we have to move it to a new account. So then it was just moved to the next type of account that would offer us the most interest at that time, meaning to mirror exactly what we were doing with the wealth management account.
So it stayed within Mutual of Omaha, but your coding on the general ledger doesn't say that. It says it's transferred to like
PMM, Premium Money Market Account.
Oh,
Yeah.
that's why you did it like that. Okay.
Yeah.
Okay.
Oh, I see where the confusion is. Yeah. Yeah. so
Yeah,
the
because it
PMM
changed,
is-
you know, the account
Yeah.
number. It looked like a total different coding, like a bank coding or something. So,
Yeah.
okay, okay,
Those,
all right, great.
those old accounts, Sonia, probably said WM something which stood for wealth management account. And then,
Yeah, some of them were just CAB and
yeah, CAB, yeah.
yeah, and but yeah, I couldn't understand why you didn't go through the same, you know, the process, right? Where it was put in front of the board, et cetera. But like you say, if it was within the same bank and
Yeah,
you're just
it
moving
is.
it to,
Yeah.
okay.
And then,
And so who was aware of that other than you?
well, yeah, Leslie was the treasurer at the time, so she just had to sign the document, you know, approving the bank to move that. But like in terms of moving the funds, we had no choice in the matter since they were doing away with those wealth management accounts. It had to be moved to another account. So then
Okay.
I instructed them move them then to the next type of account that's as similar to wealth management and gives us the highest interest rate, like the wealth management accounts did. And then
Okay.
like in the GL, yeah, when you see the PMM, that just simply stands for premium money market.
Okay. All right, great. Thanks.
Yeah.
Thank you,
All
Sonia.
right, thank you. Have a good night.
Any other community questions?
Doesn't look like it at this point.
Okay. Well, if the committee has nothing further to say, I move that do I move to close the meeting, AJ? Move that we adjourn. Can I get a second?
That
Second.
Second.
All right. Thank you very much, everybody. Good night.
Thank you
Thank
for
you.
your time.
Night.
Right.
Have a good night, everybody.